Good morning, everybody. Sawadee krap. We will do the presentation in two halves. In the first half, we will talk about the industry structure, and in the second half, we will talk about the financials of the company. So if you look at the industry itself, pressure shipping is part of the dry cargo tramp freight market. And as you can see, we are located in two sizes out of the 5 sizes that are there in the dry cargo market. Please keep in mind, we only carry dry bulk commodities. We do not carry any containers, neither do we carry any wet cargoes. This is a snapshot view of the company. It shows you how we've been growing our assets. At the 1st of January 2011, we had 21 ships. As of the end of April, we've got 39 ships. As of the 1st of January 2011, the average age was 15 and a half. We are now down to 10.5 years. The insured values have gone up from $327 million to $576 million. The book values have gone up from $205 million to $574 million. The total deadweight has gone from 500,000 deadweight tons to 1.3 million deadweight tons. The average size per ship has gone from 25,000 tons to 33,000 tons. So you can see that we have been growing the fleet, reducing the average age, and increasing the average size per ship. This is a slide which shows you the Baltic Dry Index and how it has changed over time. You can see that in the past, in 1985, 86, 87, when the last big recession in shipping took place, and you can look at the current position, 2010, 11, and 12, it looks as if we are in the same position as we were in 1985, 86, 87. If you look at the index in terms of averages, it gives you an even better picture. If you look at 1985, 86, 87, you can see that 1986 was the low point of the cycle at that time and had the lowest ever BDI average for the year. If you look at 2011, 12, and 13, you can see that 12 was the third lowest BDI ever in history, and the first quarter of 2013, the average for BDI looks like the second lowest ever in history. So you can imagine that we are now coming up close to, in 2013, very close to what we experienced in 1986. This slide gives you a composite of the demand-supply equation. And if you look at this, we've given you 2 points. If you look at the light blue circle, it shows you that the average annual ton-mile demand has grown between 2010 and 2012 by 8%. And if you look at the red area that we have outlined for you, you can see that the forecast annual ton-mile demand growth is of the magnitude of 11% over 2013 to 2015. Now, this is a very detailed study done by DNB Markets. It's almost 870 pages long, and so they've done a lot of research before they've come up with this analysis for you. This is a raw picture showing you the demand broken down into the 4 major categories of cargoes: iron ore, coal, grains, and other bulks. And if you look at the table which is there on the top, it will give you what is the expected growth rate in just pure tons, not ton mile, and definitely not looking at it as a demand growth picture. If you look at this slide, it gives you the seasonality impact of the BDI, which is affected by industrial production slowing down during the holiday season, which is in the Western world or the OECD countries in July, August. And you can see quite clearly that there is a slowdown, and especially this is much more evident in the blue line, which is the period between 1985 and 1999. Because at that time, OECD was the major industrial production countries in the world. Today, China has become the major IP country of the world, and you can see that during the month of February, how the line drops quite dramatically, because it shows you that industrial production in China slows down during Chinese New Year. We still see that in the pink line that there is some reduction in the BDI during the months of July, August and September, and this reflects the slowing down of grain cargoes during these months. The southern hemisphere grain shipments are over by June, July, and the northern hemisphere grain shipments only start in October. So the months of July, August and September, there is a slowdown in the movement of grain. So you can see that also in the seasonality impact. If you look at how prices and asset values have changed, and if you compare 1985, 86, 87 versus 2010, 11 and 12, then you can clearly see a trend. You can see that in 1985, 86, 87, the asset values were lowest in 1986, and then they started to go up. But if you look at 10, 11 and 12, you can see that asset values are continuing to fall. And we think that 2013 will represent 1986, the low point of the cycle. And you will then see in 2014 onwards, prices of assets starting to go up. In fact, what we see right now is that prices are about $1 million more, $1 million to $2 million more per ship, compared to, say, maybe even 3 months ago. So prices are already starting to firm up. If you look at the operating expenses, if you look at 1985, 86, 87, you see a clear declining trend. That means expenses were coming down. But if you look at 2010, 11 and 12, the numbers are actually going up on a steady basis. That's the first thing to notice. The second thing to notice is that the cost today is at least 1.5 to 2 times more expensive than it was in 1985, 86, 87 to run the same ships. If you look at 1-year time charter rates and look at 1985, 86, 87, you can see clearly that the trend was slowest and lowest in 1986, but thereafter the rates started to go back up. However, if you look at 10, 11 and 12, rates are continuing to decline. And we expect this decline to bottom out during 13 and 14. So you will see that rates will start to improve, we feel, at least in the second half of 2014. Coming to the supply side, if you look at the changes that have taken place in the supply side and look at the top half of the slide, you can see that there are totally 10,600 ships in existence. The average age of the world fleet has come down to less than 10 years of age. The total deadweight tons is now 705 million deadweight tons, and the average size per ship is about 66,000. If you look at what changes just took place in the first quarter of this year, and look at the changes in terms of deadweight tons, then you can see that in the small handy size sector, it was the only sector where there was negative growth. That means there was a shrinkage of the overall supply side in first quarter. But if you look at, say, for example, the Cape size sector, or if you look at the Panamax sector, or if you look at any of the other sectors, you'll find that there was a small amount of growth taking place. If you look at the balance ships that are there still to come in the next 3 quarters or the last 3 quarters of this year, you can see that there is another 10.3% still to come. If you look at 2014, there's 5.2% still to come. And if you look at 15 and 16, it almost comes down to 0. So what are the factors that can affect supply? One is scrapping, that's a permanent removal of supply, and the other is a slippage in delivery of new ships. So if you look at the scrapping activity, you can see clearly that we've been scrapping a lot of ships compared to the past. But if you were to